Over the last few days, the crypto market shaved $400 billion off its market cap and dumped about 17% rapidly. Most major altcoins with big names and large funding rounds like Sui and Celestia are down 70 to 80% in just 3 months' time. It's beginning to feel like the start of a long and dreadful bear market. What makes matters worse is that Germany just sold right off the heels of the Mt. Gox releasing Bitcoin back to creditors, creating added sell pressure. But what's really been going on over the past week that's been screwing you and your crypto portfolio? Well, in this video, we're going to be covering macro events surrounding consumers, economic data, major market indexes, and obviously we'll dive into crypto and XRP Ripple charts to see if we can't find and paint a clear picture of what's really been going on under the surface. By the end of this video, you should feel more confident and have the right mental tools to level up your crypto game and make a decision about what to do with your crypto portfolio. Hello and welcome to the Bull Runners YouTube channel. My name is Paul, and as always, our content is for education and entertainment only. This isn't intended to be financial advice. Investing in crypto is risky and requires patience and good risk management. At no point in time are you guaranteed to make money, and we don't guarantee any results. So before you make decisions, do your own research and consult with a licensed financial advisor. Also, we may hold positions in some of the cryptocurrencies we mention on this channel. That doesn't mean it's a recommendation for you to do the same. Results aren't typical, so don't be typical. Stay bullish, and let's get into the video. So the first thing I'm going to do is I'm going to hop on over to the total crypto market cap chart, and we're going to compare this against total 3, and total 3 is actually all of the crypto market cap excluding Bitcoin and Ethereum, and then we can also track it against basically the top 10. So the first thing you can see right here is the fact that we had our major low back in December of 2020, and we had our yearly high, I should say, on March 14th of 2024 at about $2.7 trillion. We actually had a higher market cap at the Pico top of November 2021, which is really interesting. Okay, currently we are down, if I take a tool and drag it, okay, about 20% from our most recent high and 24% from our high for the year in terms of market cap, which would be about 644 billion. But as of recently, we saw a pretty nasty sell-off, a long, large wick to the downside. And really what I'm after is I just want to see how something like, Bitcoin and Ethereum versus the total market cap would perform. In other words, that includes the top 8. And then finally, the others market cap, which would exclude basically the top 10. Okay, and we'll explain that here in a second. But as you can see here, I'm going to take it and put it on a percentage scale. And from this top, and we're just going to try to drag it over to this top right here, you can see that the market cap has been relatively strong and equal to the Bitcoin and Ethereum subtraction from the market cap here. Okay, in other words, obviously Bitcoin and Ethereum are kind of running the show in the market, but at one point in time, this yellow line, which is excluding Bitcoin and Ethereum, and would include virtually all altcoins, including the top 10 that are not Bitcoin and Ethereum, actually outperformed. So things like XRP or like a Solana, or a Binance, right, token, we're actually outperforming Bitcoin and Ethereum. And then if I toss this on, as you can see from this Pico top over here, and I'm really just trying to drag it to the edge right here, you can see that others, right, not the top 10, so everything that is outside of the top 10 in terms of market cap, and if we come over to coinmarketcap.com, you can see that would be all of these top 10 tokens. So anything that is in the top 10 would be excluded from the list. Anything that is below it would be considered in this blue line for the market cap. You can see that these guys are down about the same, right? So it's obviously safer to be in the top 10, and that would include XRP, obviously. And XRP has actually been safer than most tokens as of recently, so this is a really good sign. Bounced really strong recently. We'll talk about that shortly. But in general, if you were outside of those top 10, right, in the same time frame, you'd be down about 38% from this peak right here in March. Whereas in that same time frame, you'd only be down about 20% if you would have held either the top 10 cryptos, right, or even just Bitcoin and Ethereum. So you're basically taking on more risk by being in altcoins that are outside of the top 10, and that's almost just common sense if you've already held them and you've seen what's happened to portfolios in the not so recent past. But what's been causing all of this added sell pressure? Well, I think one of the major things that there's a few different variables and factors that I would say contribute to something like this. Okay, the first one was back in January of 2024, we had that major ETF news with virtually the spot ETF, right? Everyone was flooding in, everyone actually started buying into that news event, and it really created in already, what we would consider an uptrend, a move to the upside right here. And then what happened was, right, the summer started hitting. The market had already rallied from the recent lows, right, in 2023, 175%. So obviously the market needed some time to cool off. And I'll tell you right now, what worries me a little bit right now is the fact that we had this low in November of 2022 into January of 2023. And since that point in time, we had nothing but a serious uptrend, right? A series of higher highs, higher lows. So this low is higher than this low, and this high is higher than this high, right? And then we had a double bottom right here with a double top right here. So really just a range. But then when we broke to a new high and a new one, right, we put in a new lower high, or sorry, lower low. So we have a series of lower lows and lower highs, right? And then we had an uptrend for a new major all-time high. This would have been our low in the range. So before this came in right here, this is what I would consider a textbook uptrend. But then what happened, right? Well, we had a new lower high. We failed to break above the previous highs. And this is, by the way, the market cap of all of crypto, right? So, and now we are painting a new downtrend, right? If this was our low right here, what happened? We broke below that low for a new low, and we put in a new higher, lower high. So this is officially, based on 4 points alone, a new downtrend. Now, what remains to be seen, and what I'd really like to see, is a break above support and then a new high above this range right here at about $2.28 trillion. And if I were to take the Bitcoin chart, right, it's no different, right? Because again, most of the market cap is in Bitcoin when you really look at its market dominance, and it's about 55% at any given time. That means virtually all of the money in crypto markets is in Bitcoin and Ethereum, and then the rest is spread out throughout all of the other cryptos. And what's interesting is, Bitcoin is there to serve a specific purpose. It's the earliest, it's the mothership, but it's a very different purpose and arguably has less growth potential now than the majority of these other cryptos and technologies, which I would consider, they have the ability to grow far more in terms of their multiples. And that would include, the business model of XRP and Ripple. But as things stand, we are officially in a new downtrend. And I would say that's due to a few different variables right now. So that would be the first variable. The second variable, who knows, right? Typically the summers, we have experienced what you call a summer lull. So even in previous bull markets, okay, as you can see here, through the months of June into basically, well, in this case, it was quite a while into the dump. But in bull markets, we typically experience a summer lull. Well, the markets just kind of range, like right back here, right? Or in this case, in June and May of 2023, we ranged for quite a while and sold off. But in previous, situations, right, we would sell off and not put in a new major low. It's just we had low volatility, low volume, low interest through this range right here, and then would, start to range back into these highs in October October before we made that next move up. So this could potentially be a bear trap, right? A lot of people were leveraged in the market and they had stop losses, and I'll go ahead and remove these drawings right here. They had stop losses right below this range right here of $56,000. The market came and popped, right, and had we would call cascading liquidations, and dropped below the range here to liquidate all of these people who were long and had stop losses below this low. And then it comes back up and see some healthy support right at this range, only to start making new highs again. So that is very much potential, and if I were a buyer and wanted to take on a bit of risk, that would be where it's at. My resistance would be at around $60,000, right, to $57,000, so in those ranges. And I'll go ahead and put a couple of lines right there, right? That would be where I see a resistance, and I would like to see Bitcoin, if we're going to see XRP or any cryptos do much of anything for the short while, break above this previous range high right here at 64,000 for a new high. And this is what then I would consider a bear trap. People wanted to be bearish here. They were trapped into their positions as the market continues to move upwards and onwards. And then another reason that we got this nasty sell-off would be because the government of Germany started selling off some of their 50,000 Bitcoin. So if I come over to bitcointreasuries.net and then go to the country of Germany, you can see that they now have a renewed balance of 40,359 Bitcoin. And so through this period of time, from basically January 30th through July, they really had their reserves drop off. And as you can see here, as they started selling obviously into some weakness on Bitcoin, which could lead me to believe that maybe some of their authorities, or maybe, the people behind the scenes managing their money, looked at this relative weakness and said, well, we've been sitting on this Bitcoin for a while now, and the price of Bitcoin is arguably at a multi-year high. Maybe we should start selling some of that position into this strength long-term and relative shorter-term weakness right around here. And so as you can see here, the price of Bitcoin dumped pretty tremendously alongside their active selling. And then to make matters worse, right, Mt. Gox began repaying their Bitcoin creditors a decade after the exchange's collapse. This is not necessarily new news. We obviously saw that the Bitcoin from Mt. Gox was moving and on the move over the last couple of months, and that obviously caused concerns and fears of downward pressure and price action for Bitcoin. So people started selling into the rumor, but it's no longer a rumor. According to data from Arkham Intelligence on Thursday and Friday, just this week, Mt. Gox moved billions of dollars in Bitcoin from its crypto wallets ahead of the repayment memo. More than 47,000 Bitcoins worth $2.7 billion were moved out of an offline cryptocurrency wallet associated with Mt. Gox, Arkham Intelligence said Friday. And so when, Bitcoin typically sits on exchange, that's not that big of a deal. But when Bitcoin begins to be moved onto exchanges, that would typically indicate that people are getting ready to sell, right? Because let's just say I have a product here. Let's say I have a Game Boy Color, for example, sitting on my desk, right? I can't just go and want to sell it directly from my desk. I'd have to go to a marketplace, whether it's online or offline. I have to put it in front of eyeballs that are willing to buy it. And so in the same manner, when Bitcoin moves onto exchanges, that can add some unnecessary or basically rumors of sell pressure. It doesn't mean they're going to sell right away. It simply means that they're likely getting prepared to, because more often than not, the bigger investors, when they hold Bitcoin, they withdraw it from an exchange to hold on to it for the long term. They don't want it in the marketplace. They want it behind, a lock and key, a vault, if you will, right? In a cold storage wallet. And so in this situation, as you can see here, when Bitcoin was sitting at a price of 61,800, right, all the way through this range here, or since basically June 22nd, more and more Bitcoin was actually hitting the exchanges. And then when it peaked off right here, right, the Bitcoin was reaching the exchanges, and then looks like that added extra unnecessary or undesired sell pressure. So the price dropped from 62,800 right, down to 57,000, and the reserves increased from basically 2.844 million all the way to 2.848 million. And so an extra it's crazy how just an extra 4,000 plus Bitcoin hitting an exchange can actually move the price pretty severely. So right here we have the price of Bitcoin, and as you can see here, we had our most recent high at about $64,000 right here, and then a pretty nasty dump down to $53,000, only for it to have what I would consider a V-shaped recovery right around here, and the price started cooking right back into this range at 58,000 as of today. Now, this right here would be open interest candles, and I believe this is an aggregate of open interest on exchanges, but in particular, a lot of that volume does come from Binance. So right here, okay, typically when open interest is rising, and I'll just give you an example. When open interest is rising and the price is rising, typically longs are opening into the market. So people are relatively long. And in this situation, you can see we had another V-shaped type recovery, if you will, a new higher low, and then a new higher high. So why wouldn't people be opening longs into this range on an hourly time frame? But then the price started dumping while open interest continued to climb, which typically indicates shorts are opening in the market. So people are relatively bearish and the shorts are opening in the market. Now, as the price is rising and the open interest is declining, this typically indicates that the shorts are now closing their positions while longs are holding. And so as we can see here right below, we have aggregated liquidations. So obviously right up here, we had about $49 million in a single hour liquidated to the long side. So in other words, on this candle right here, from $58,000 down to $57,000, okay, people were relatively long, thinking, I want, the market to go up. I expect the market to go up. And then the market moved against them, which closed out some long positions and liquidated them for the tune of about $49 to $50 million. And that would typically cause cascading liquidations, where once you hit, liquidations right below this level, the price continues to decline in order to close more longs. And that's what caused more long liquidations here. Now, typically in a situation where you see a massive amount of long liquidations in a bearish move, that would, mark your local bottom. So naturally, the price is going to move up. And as you can see, it happened here again. Massive amount of long liquidations on an hourly. Then we had cascading, for more long liquidations, only for the price then to recover gently. Now, does that mean that the price is going to continue moving up? In other words, I do believe people are currently short-term long or bullish, but in general, right, the trend is your friend, which it helps to go and look at the liquidation maps. And in particular, as you can see here, we are currently at this price of $58,180, and the majority of people would be long, which is why you have this big old cliff over here. In other words, if the price, right, goes to, let's say, $55,438, which is below our current price, then $1.26 billion of longs would be liquidated. So this is indicative of the fact that the majority of traders right now are long in the futures market from a daily time frame. But if I went to the 30-day time frame, as you can see here, this is a really wacky looking chart. And so I'm just going to drag it all the way to the left here. And as you can see here, okay, we have about $2.31 billion of long leverage in the market, up to the tune of $47,000. But on the flip side, right, for the people that are actually short, you can see we have a far more height and depth and cliffs in this thing, all the way over to $65,000. And this would be short liquidations. In other words, if the market hits $65,000, okay, currently we're sitting at about $58,000, then we would have $7.11 billion of short liquidations. Now, again, this is dynamic. It's not going to happen in one day typically, unless there was some insane news, some sort of a black swan event, right? But typically in black swan events, markets are dumping. They're not increasing like crazy unless it's like, you know, the XRP Ripple case back in 2023 when they were considered a commodity, not security, right? So we have $65,000 right up here. And again, this is going to be dynamic. Things are going to change. But in general, what this is telling me is that the majority of people are currently short. And so I don't typically want to bet against the trend. It doesn't mean that people aren't going to get liquidated in these ranges. We're not going to see some fluctuations. It simply means that when in doubt, I have to zoom out. And so looking at what we looked at earlier, we are officially in a new downtrend. That doesn't mean that we can't break above this range here at 72. But what I thoroughly expect when you look at history is it more often in a bull market. I am long-term bullish, but right now I am relatively short-term bearish. So, or, you know, just in general, we might have a ranging deal where we come back here into the $47,000 range and then start to cook back into the $70,000 range. And if this type of an, you know, scenario happened, I don't think things are going to look too hot for anything in general, or like something like XRP. So now let's look at the price of XRP and talk about what potential outcomes there are. If you've watched our past videos, we do expect this thing to hit previous all-time highs and then new all-time highs. More often than not, when we see new lower lows, and what I talked about in a recent call is I do expect us to maybe potentially take this low out right here at 42 cents for a double bottom, you know, get some of that long leverage out of the system. We've been talking about that 38 38 cent range, and then a break back above. The good news with an XRP is when I trade it against Bitcoin, or track it against Bitcoin, I should say, right, in this range right here, right, Bitcoin, well, right around here, Bitcoin is sitting at about 13% down, while XRP is down 26. But in general, XRP, right, has actually outperformed it in this last little dump. In other words, Bitcoin would be down about 15%, whereas XRP is only down 10%. So as of right now, okay, yes, long term, XRP has been underperforming Bitcoin, but in the short term, XRP's dumps have been weaker than Bitcoin's, and it's been holding its range for quite some time now. But this was obviously an amazing buy zone here at 38 cents, because when I pull up something like the VRVP, right, which is a visible range volume profile, it's just telling me the total amount of volume traded in an entire range. You can see here that we have stupid amounts of volume traded between 33 cents to 38 cents. That's our first major range of support. Our lowest range obviously being 20 cents to 30 cents. But in general, even looking at this long-term chart going back to 2017, I mean, I would argue that this is such a stupid amount of volume. That's going to be very hard for XRP to break anytime below 38 cents down to even 30 cents over the upcoming year, which means in a bull market, as XRP typically lags Bitcoin, if Bitcoin starts to pump into new all-time high territory, you'd want to be accumulating into these ranges here down to 30 cents if it dumped, in order to accumulate as much as you possibly can for it to pump to new all-time highs. And when you look at our previous videos on how much XRP it would require to be a millionaire, which we will link down below or somewhere in this video, you can watch to see how much XRP you would need to be a millionaire at previous all-time high and then new all-time highs. And honestly, it's really not that much in terms of a dollar amount relative to what it would require if you were invested in an index fund, right, like the S&P 500 or like a Vanguard, so on and so forth. So right now is a stupid good time and an opportunity in a bull market to be investing into crypto. That doesn't mean that we can't go lower. It simply means that, you know, your risk to reward, right, your risk of buying into these ranges and dollar cost averaging over this period of time is far less risky than not investing at all, only to watch this thing, you know, continue its upward trajectory and momentum through the end of the year into October, November, December, December, January. Those are typically the best performing months that, when you look at the data consistently, right? When crypto and Bitcoin in particular are in an upward trajectory and they are trending up, the summers are usually slow. You usually get some downward price action, you usually get some negative news, but not a bad time to add. And so when we look at the crypto fear and greed index, and I'll just go ahead and pull this up and make it slightly larger, you can see here that in, for example, 2020, September, right before we started seeing some insane price action to the upside, when the crypto fear and greed index was sitting in that 38 range, so on and so forth, right, then started pumping to a new high of like 92, 93. These were closer to the all-time highs, whereas this was a good time to accumulate. In similar fashion, right, back here in September of 2023, before we put in those new highs for the year in January through March, we hit lows of like 38 and even at one point down here at like 26. Well, guess what? We're back in these ranges of 26 on July 6th, and guess what? We're still trending to the upside. We have an intermediate term downtrend, but longer term, even if this was our new low for the range, this is a series of higher highs and higher lows. So even if we dump to, let's say, $47,000, I would argue, okay, that's fine. So this was an intermediate term downtrend, only for us to climb back into a range. And so we would have to break our previous range highs in order for the trend continuation to be at play. And in situations like this, I don't typically love using trend lines, right? But if I drew a trend line like this, you can see it perfectly aligns with this range at $48,000. So I'm not saying that we're going to go there. What I am saying is that it would very much be a possibility at play through the rest of the summer. And that would include all cryptos. Your other cryptos are going to sell off even more if Bitcoin goes down to $48,000. And we proved that at the start of this video. But in general, we would still be in an uptrend, which would make it look something like this, right? We would have our very lowest low, right? We'd have our highs right here, our next major low, our next major high, our next major low, and then we would potentially go for that fifth wave up to our new, I would argue multi-year all-time high. Which leads me to my next point. I don't see a situation in the current market environment where, altcoins are going to perform really well. I do believe it's probably a good time to start adding to positions that you have high conviction in, like an XRP. But through the summer, I think things are going to be a little bit messy. Altcoins require, when you look at the amount of inflows on Bitcoin, the average inflow into the ETF is about 14K. The average inflow on, an S&P 500, for example, the SPY, is closer to 150K. So what that indicates is that the majority of the crypto market, including Bitcoin, is driven by retail desire. And retailers do love Bitcoin when you really look, for example, at this video we're going to watch.
So, look, we have heard that the Democrats are making overtures into crypto over the last couple of. I'm not sure if I agree with that. I think maybe if I add one word, it looks like not enough is changing in Democratic support for crypto. I think that's a fair statement. But I think it is fair to say that since Trump came out decidedly pro-crypto, and since the realization of 52 million, I want to make sure people understand this. So roughly 52 million Americans have bought crypto. Roughly 52 million Americans have bought stock. I want to say that again. Now, I'm not talking about stock ownership through pensions and other ways. That's much, much higher. But about the same number of Americans have made a conscious decision to go on to an online broker and buy a share of stock that have bought crypto. It's a very, very important voting contingent.
So what that indicates to me is that the majority of retail investors who are currently in are already there. We just need now investors from a larger scale, the people that are managing retirement accounts and pensions, to want to play with crypto. And if they're not currently playing with Bitcoin, the odds are they're probably not playing with altcoins. That means that altcoins are going to struggle in an environment that's already bearish and where Bitcoin, might see some support from institutions, your altcoins will not. So it really comes down to the fact that we need retail investors to pick up steam here and have some extra money to buy crypto. But then that's the problem, right? Right now, inflation, even from an aggregate to present day, is sitting about an average of 25.34%. In other words, what used to cost me, $5,000 for the year would now cost me like $6,200 for the year. And that's just not sustainable, right? That eats away at any, advantage I might have had when it comes to saving money. And people just aren't able to save money anymore, even at higher incomes. And here we have an article that was actually published in January 30th, 2023. And by the way, the environment of savings has not changed much, and we'll look at some data to verify that. But this article went on to say more Americans earning over 100K are living paycheck to paycheck. Roughly 64% of U.S. consumers lived paycheck to paycheck. In December, 51% of those earning more than $100,000 per year said they are lived paycheck to paycheck, up 42% a year earlier, which would make sense, right? We're a consumer nation. So looking at the United States through all of the years, right, we outpace our next closest competitor by more than a couple 100%, right? We spend on average $17.5 trillion, right, household final consumption expenditure, versus the next closest country that spends a lot of money, which is a massive nation that has more than 3 times our population, only at $6.64 trillion in 2022, and we haven't seen the 2023 data yet. But what that explains to me is that we are a nation of consumers, right? And so I will go ahead and pull up the data to prove that. So right here we have the SPDR Select Sector Fund. In other words, this is consumer discretionary. It's an index on discretionary spending. Okay, discretionary spending is on anything that would be considered entertainment, products that are not necessary for actual living, right? Like buying a new TV, potentially the newer car, you name it. This is discretionary spending. And so right here you can see that has consistently gone up. And it's clearly at a new yearly high. So even back here in 2023, right, this was our high. We continued ranging for a while, and we just broke out to new highs, which means people feel comfortable enough to spend money, but when they're spending money, they're not able to afford savings. And arguably, when savings go down, they take on credit, right? So when they take on credit, more often than not, right, they spend money they don't have. But that typically means that they're not thinking forward, or into the future. They're not investing their money. They're just spending it. And so right here you can see we have the delinquency rate on consumer loans, and we bottomed out in 2021. And since 2021, this delinquency rate has climbed from 1.5% all the way up to 2.69%. And we are at an all-time high in January of 2024. The last time we were here was in 2012, just off the tail of the Great Recession, right? You can see that we had a massive amount of delinquencies by 2009. It started declining, but that's because the economy was recovering. People started to earn more, right? We were in a better, a portion of the the market. We were recovering, but now we're at the highest rates that we've been, and that's on all commercial banks and on consumer loans. When you look at, for example, just credit card loans, it's even worse at 3.16%. Similar looking chart, but what this is telling me is that not only are consumers not able to afford as much, and that's due to inflation, but they're also willing to spend more than they currently have, and then when they can't afford to pay it back, they go delinquent. So the consumer is getting totally squeezed, right? Here's the share of total net worth held by the bottom 50% of people. And as you can see here, we were at a high back when I was born in 1992. And since then, we've actually had the gap increase. Okay. In other words, people have less and less wealth at the bottom 50%. And that kind of makes sense. Yes, we've recovered slightly since 2012, but here recently we actually peaked off in 2022, and now we've started to decline. We're sitting in that 2.5 range. Over here, when you look at the total net worth held by the top 1%, their net worths have just consistently climbed because they own all the assets. And so as money supply increases, the rich get richer, the poor get poor. And really at the end of the day, even the middle class is moving into the lower income or lower class because of inflation, which leads me to say one thing. Right now, altcoins and crypto are completely and totally reliant on money coming in from the average retail investor. And if the retail investor doesn't have money and they're going delinquent, the last thing on their mind is tossing money into, a crypto that is going to go down in value. I mean, virtually everything in general over the last, 6 months, even the good performers are down. So I could click through over and over and over again. And since March, and by the way, this is on a daily time frame, we'll remove that drawing, you can see that we are down. So if anyone invested at any point in time in the last 3 months, they would be down. And if I'm already struggling to make all of my bills paycheck to paycheck, you tell me if I'm going to invest in an altcoin. The answer is probably not. So in other words, we need the economic environment to also change for people to feel confident and comfortable to invest in just about anything on this very lengthy list that I have of cryptos. And by the way, if you want access to lists like this and you want access to a boatload of resources and our new product when we launch it at bullrunners.com, go ahead and click on the link below, sign up, and you'll be able to get access to all sorts of really cool things like this, like even our market sectors list, okay? That goes through DeFi lending, goes through infrastructure, data oracles, DePIN, staking, DeFi derivatives, so on and so forth. There's a lot of things that we offer that are absolutely free just for being on the list, so we'd love for you to get access to that. Okay, so now we'll talk about the positive news and cover some potential solid outcomes. This is not necessarily new news, but I do think it's really important to, keep our eye on the ball and just remember what's in place and what's to come. Here we have a video of Larry Fink, right, from BlackRock. Most of you guys might know him. And he used some very interesting language when he's talking about creating his own stock exchange, if you will. This would be an exchange to compete with the NASDAQ and the NYSE. It's very difficult for virtually anyone to be involved in this type of a business, especially when you're competing against mega giants like that. However, if there's anyone that's probably able to do it, it would be him in partnership with Citadel. And I can't remember the dude's name, Ken something, but to make a long story short, here's the language that he uses when he talks about that.
We believe the next step going forward will be the tokenization of financial assets. And that means every stock, every bond will have its own, basically, CUSIP. It'll be on general ledger. Every investor, you and I, will have our own number, our own identification. We could rid ourselves of all issues around illicit activities around bonds and stocks and digital by having a tokenization. But the most importantly thing, we could customize.
My name is Tyler.
And there is an ad. But what he's basically stating in this video is that they are going to integrate blockchain technologies into this new exchange. And so that opens the door, right, for a lot of these technologies and something like the XRP ledger to enter the space in a very major way with real backing, where now institutions can play ball in the BlackRock world on a major exchange, right, without really having to worry about the word crypto, the volatility of crypto. They're using the technology. Those technologies produce revenues that can be tracked and measured. And ultimately, as earnings go up, stock prices, and in this case, crypto prices, would go up. So that would be a massive and important thing for crypto as a whole. The next, piece of bullish news that I've looked at was when I was looking at the amount of exchange reserves for Bitcoin, how it consistently was rising, which is not a healthy thing for the price of Bitcoin. There's reasons that people want to, deposit their Bitcoin onto exchanges. Some people are like, man, this is at a price already. I don't want to see the price go lower. I need to buy a home. For other people, people, they're trading it, right? For other people, you know, you name it. Maybe mining companies need a bit of money to run over the next 3 months in case there is a summer lull through, you know, October. Who knows? The point I'm making is, as of very recently, a stupid amount of Bitcoin was withdrawn from exchanges, almost 100,000 Bitcoin. And so this right here, right, from, let's see here, July 3rd through, you know, present, is very indicative of the fact that people are still very long-term bullish, and whoever's withdrawing this amount of Bitcoin, they're not playing with small sums. They're looking at this price and saying, do I believe the price of Bitcoin and the price of crypto is going to be up over the next year to 2 years versus where we're at and down? And, you know, this right here would be a complete vote of confidence. You don't withdraw that much Bitcoin unless you're confident that this is a good price to buy and get out. So again, very, you know, currently the market right now is still longer term, you know, short and bearish, short term bearish, but longer term, the price action is pointing to higher highs. So now that we've looked at that, let's go ahead and look at XRP, and let's see if we can find anything in particular. The first thing that I want to make mention of is the fact that we did have some increased volume through this range into the downside, right? But like we talked about as well, we see a boatload of support at this 38-cent range, and arguably we saw a lot of liquidations happen right here through this range, which leads me to believe that XRP is due and in store for a move to the upside. So the price that I would like to see XRP break above would be 52 cents. If XRP through the upcoming week and, you know, month can break above this 52-cent range, I think we're in business to get back up into the 70-cent range, okay? And then things remain to be seen there. But again, as resistances and supports work, right, it's kind of like a door. The more you knock, the more likely it's going to be open. So typically when I see bottoms, right, I don't like triple bottoms as much as I like double bottoms. A double bottom would tell me, okay, there was a boatload of demand there, and now it's moving up. But if it breaks down a third time and touches, that's a far weaker, you know, bottom on the third time than it is on the second time. So the more you touch range, the more likely you're inclined to break through that range. I do like the fact that volume has been relatively weak, and we saw a massive, what I would argue, capitulation and, you know, sell event, if you will. But now we're in a range where I think accumulation makes the most sense. And so I would practice good risk management by still dollar cost averaging, but I am slightly more bullish in this range. And that does not, you know, mean I'm telling you to buy more than you can afford. Do what you want. But at the end of the day, I think the risk to reward here makes far more sense right now than it did at 50 cents, right? I mean, that's just common sense. So that said, I think it's a great time to pick more of this up. Yes, you know, these companies like, you know, MtGau and, you know, the country of Germany have really screwed your portfolio over the last little while, but I think longer term we're still in a very good position and very bullish. So summer is a great time to accumulate into a longer, you know, term bull market. And if you enjoyed the video, smash that subscribe button, like the video, comment below what you think is going to happen. And I appreciate you watching the video. Again, if you want access to all sorts of cool stuff from the team, go to bullrunners.com, and I look forward to seeing you in the next video. Goodbye.